Hello and welcome to a new episode of Everstage's Go to Master Show Season 3. We converse with RevOps and GTM leaders from some of the most successful companies today and learn from their unique stories. Joining us today is Benito Piuzzi, the Senior Vice President, Organization Strategy at Lakeview Loan Servicing. Benito, thanks for joining us. Could you start by telling our listeners a little bit about yourself?
Yeah, thank you. Thank you for having me. I'm originally from Chile. I've been in the States for over 20 years. I always think of myself as being an ops guy first and foremost. I started my career in manufacturing, supply chain, warehousing, and through a period of time at McKinsey, transitioned over to more of a strategy role at some point in my career 10 years ago. And with that, you kind of graduate from being sort of a middle management and analysis level work, and then you go into more strategy. Did that for over 4 years, a lot of work scaling businesses, and then I transitioned over kind of by chance into the world of finance and fintech back in 2020. So then I transitioned over to Better.com, a fintech at the time, and then over to Lakeview Loan Servicing, where I've held a couple of roles there. So spent the last almost 6 years in mortgage kind of by chance, but all of them with the common denominator around ops and strategy, which is where I think I've been able to learn and contribute the most to different businesses I've been part of.
Very interesting, from industrial engineering to McKinsey and then Better.com to Lakeview. When you look back to all these factors, what shaped how you think about building scalable, execution focused organizations today, Benito?
Yeah, I mean it's a good question, and I always think of I start by always pointing out the intentionality of a business that want to scale, because scalability doesn't happen by chance. It sounds kind of obvious, but you have to think. It's almost like you have to think of what are the things that can go wrong in advance, and then try to plan for those things. And it's less about perfection because people tend to think McKinsey overthink things, which can be true, and startups usually are more nimble and try to fail fast. And somewhere in the middle, you just try to have a plan. It doesn't have to be perfect. So when I think about scalability, things that I've learned are about, for example, having a plan, meaning what are the things that are going to allow me to be successful in growing my business. You almost starts at the very top by defining what does winning means. Like, to scale a business means we're going to be in X number of markets. We're going to sell more of this product. And then you got to peel the onion and think backwards. Well, what is my talent strategy? What is my technology strategy? What are all the things that could go wrong that could prevent me from achieving that? Because you can throw bodies at a problem, but if you're not properly trained, if you disrupt your reputation as a brand, if your people don't know how to properly handle customers, you could do more damage to your business if you don't scale well. So it's not just about satisfying demand, right? But it's more about the thought process behind how do I plan in advance the talent, the technology, and the product development, all of those things combined, but with a kind of like a T minus mindset. Like, when do I need X? And then how many times, how many months in advance do I need to do the different things instead of like a playbook driven approach? That, and we can talk about multiple examples. I know we don't have the time, but ultimately, having an intentionality behind a plan that is thought out without being perfect is what's really helped businesses be scalable. And then when things don't go well, just be okay with it. Just quickly just address it, fix it with the right teams. But that's how I think about scalability. You have to have a playbook driven approach.
I mean, talking about scalability, I think talking about your Better.com experience would be best fitting here. So, how did you help to take, roughly from a figure to in 18 months by pairing operations like I read in your profile? So, when you deconstruct that journey, what were the critical decisions around processes, org design, and, tooling that actually unlock that scale? And what would you do if you were to differently, if you were to run that play again?
Yeah, no, that's a good question. I'll be honest, to provide context for listeners on Better at the time, Better been around for a couple of years before COVID kind of made mortgage explode, like demand explode a little bit, right? So in the traditional sense, you kind of grow the business as you grow your technology with the talent, you build infrastructure, and you just try to make sure that as you grow the business, the capabilities of your technology just grows with it. Better had a particular good problem, which was demand was growing way faster than our ability to improve the tech was. We we had the capability to fix it fast enough, so we had to get creative. So what does that mean? Is really tapping into three key. I'll call it three key pillars. There's always you could think of multiple things right here, so I don't want to undermine other things that were important as well. But the top three things I can think of that were very important was how do we tap into faster recruiting? In mortgage, this is one of the biggest hurdles. How do I hire fast enough? So we had set out specifically ahead of time around offshoring companies. So we didn't rely on other companies in signed contracts. We had Better India, which allow us to be nimble around hiring and bringing talent. Now, granted, you still needed a couple of months to bring everybody. We had that strategy going for us that allow us to quickly react to demand, which allow us to mitigate our speed to fix the tech which needed to get fixed. The second piece, it's around prioritization. We ran it better for the longest time. A model you can Google this Spotify pod model or something like that. Basically, it's a very innovative way to drive change. We basically create self-driven autonomous pods with cross-functional teams that just drive improvements on an ongoing basis. The pro is that it's very nimble and you can improve and innovate consistently. The problem is when you have a business that run off metrics that require to sell things, sometimes you can be spending resources fixing the wrong thing. Not that it should not be fixed, but maybe you need to go 10x on something else. So part of the role and decisions we had to make is drive more structured business planning and prioritization, and push the technology teams, which I know is not a fun topic, but can we get ROIs? Can we really understand what is this going to do for the business? When you're in the innovative creative space, it's a tough conversation to have sometimes. People don't like to talk about like, here we go with the numbers. Like you just want to cut cost. And but conversations around, but let's talk about like what is the best case scenario, and not being overly scientific with numbers, but having a data-driven approach to prioritization allow us to funnel our tech resources to fix the most critical things that would break the tech, that would impact the business. But instead, we create a lot of reallocation to make sure we do that right. Um, and the last thing is, like I said earlier, we had built out and we just kept refining a very good playbook driven. We call it like a widget model, or gearing ratio model, which is basically mortgage is like an assembly line. It's literally like a kitchen, and you have different stations. So it's not like everybody's working in parallel. You have things that need to happen from left to right to get a loan funded. So with that being said, we had to make sure that one for every one processor, we needed to bring point X underwriter, two title person, 1.4 appraisal people, one closer. So we have to, at scale, with data figured out under different scenarios, do some analytics on what would the staffing model look like. And we created a bit of a control room, which allow us to monitor growth daily. We had meetings with our CEO daily to talk about where are we at with hiring, what are the top roles, what are the candidates. There was no room for mistakes in terms of calling people, recruiting, interviewing, hiring, training, and knowing exactly the numbers we needed 3 months in advance. Um, so we were very. It wasn't perfect in the sense that this doesn't happen, but in the perfect world, you flip a switch and now you have more capacity. Mortgage is not like that. So you typically are looking at best case scenario, I would say 2 months,
Mhm.
average three, worst 4 to 6, depending on the role to really grow and scale. So we were on a two month basis, like growing like crazy, and managing our capacity, making sure we're fixing the right problems and having organization around the execution. So I have to look back, to be frank, um, knowing what I know now. I don't know if there was a lot that we could have done, to be frank. I thought the playbook, and it wasn't just me, obviously, it was a whole team behind it. It was very well executed at the time. So yeah, that's I think about this sometimes, because Better did really well, and I was thinking, what's the ceiling here? But I couldn't think of really, unless you had like a crystal ball and fix tech differently earlier, I thought the team did really well preparing for growth at the time.
Very interesting. And then, with the transition to Lakeview, when it was going through a lot of acquisitions, so, you moved from a lot of your time managing, large operations to where now you can step back, breathe, and focus on new products, margin improvement, and partnership strategy and all. So, how does this shift change the way you set priorities, read the business, and connect, frontline execution with strategic bets?
Yeah, so the that's right. So when I was a bidder, I was in a very sort of like a strategy role, helping coordinate tech and ops. Transition over to Lakeview I ran operation. I was the COO over consumer direct and third party originations for 3 years, and recently transitioned over to a senior level role on strategy, supporting Bayview's acquisition, actually, Lakeview being a subsidiary of Bayview Asset Management, Gill being one of the largest they've done in a minute. So it is nice, to be frank, me coming from that consulting background mixed with operator. I always crave the understanding of data. It's the most critical piece in operations that you need to really understand is what is your compass, what is your north, where are you going, and sometimes it is a struggle managing the calendar when you're in charge of so many things. When you're in charge of operations, not only you're dealing with live loans that have issues, customer experience, complaints, but you also have to deal with all the compliance, quality, regulatory piece, and then internal coordination with other parties like sales and marketing, risk. But then on top of it, you manage kind of half joking, like a never ending list of priorities and improvement projects, right? That are cross functional in nature. So it is tough to really take a step back and say, I'm just going to think for a minute. Let me really see how the business is doing. It becomes more instead of, because of a meeting, a number came up and it's okay, now I know my recapture, or sometimes like our monthly review of something of financials. I know, like, okay, I know my peanut, but then you keep moving. It's like a race. You're always moving. So you have to be very quick and on your feet to pick up data on your day to day. So transitioning to a role like this, it allowed me to really take a step back and think more holistically, more strategically. As a business, who do we want to be in the market? What are the metrics that are going to allow us to know if we're doing well or not? How do you create proper synergistic opportunities to really tap into the best of each business, knowing that each are completely tapping into different parts of the market? They're not really competing for the same strategy. So it's been refreshing. It's been a lot of learning for me to really understand how different mortgage businesses operate. We are a consumer direct shop at Lakeview, right? Consumer direct taps mainly consumers by, online, sort of like a workflows where customers just go online and complete the process. Gill, for example, which is the business we recently acquired, it's a retail shop. So their business prop is like human interaction and connection, being local and your regional hub, and it's a whole different model. Um, so, anyways, it's been great. It's a good learning for me, but the best leaders that I've interacted with, which is a bit of an art, you got to do both. There is no real excuse, right? Even though it could be a struggle, you just learn how to adapt and know how to manage your metrics and then drive improvements in the company, just at different levels. It's like altitudes on a plane, really, as you try to make the business better.
I mean, absolutely. And you also mentioned that, when your calendar clears, you gravitate towards catching up on the market context
Yeah.
and then really dive into the metrics. So how do you design your operating cadence and metric slack so that you see the health of organizations at a glance? So what would be the three, four signals that you refuse to ignore, Benito?
Yeah. So this is one of those where I always think, and I tell people this is even from my days at McKinsey. We used to talk a lot of businesses about what does it mean to drive performance management, because there are different ways to define it. Metrics being one of them, right? And we used to preach about three different. It's like a triangle. I'm sure this framework evolves over time, but we used to talk about what are your KPIs. So there has to be a lot of thought behind what are the metrics. Um, you have to talk about what is the visualization of those metrics. And third, you have to define what is the cadence at which different levels of the business talk about these metrics. So with that being said, in my world, I can't mobilize everybody to pick up a consulting framework. It's not my intention. Yet I try to influence it by making sure we're all in line with what are my daily, monthly, quarterly, and yearly metrics. And that's not a one person exercise. So we've done that and we've influenced working together as we try to do our end of the year review as we plan for the next year. We establish early on what are our key metrics to drive the business. We set up our cadence, and then we've done a lot of work, and it's part of my tenure here. We've done a lot of work to improve visualization of metrics. So every day we know exactly what dashboards with live data we can use to know if the business is doing well. And then we do monthly reviews as well to take a step back and evaluate performance. So without getting into the weeds of the actual metric, I sounds like I'm repeating myself, but I go back to like the intentionality of like being thoughtful about what is it that we want and not react. Because sometimes you're looking at the wrong metric or solving the wrong problem, and that's not fun. So we have to make sure we're connected holistically, top to bottom, on the metric side, and not to go on a tangent. But one of the pieces that you'll find is critical is this idea of like my data structure, right? Because when you want to be quick to react to changes in the market or demand, you have to have reliable data to make decisions. Even to know what to work on, you rely on data. So the ability for us to improve that in the last couple of years has been monumental for us to make decisions. So that's one thing that I think has helped us really drive the use of metrics to make decisions and drive the business forward.
Got it, got it. And in our earlier conversation, Benito, you said that businesses shouldn't sit in the backseat reacting to AI, but instead design a strategy and operating model where AI is a deliberate tool and not the star of the show. So how do you think, about that in the practice? Things like data foundation,
Yeah.
organization, career paths. So, you're building an AI-ready organization without hollowing out the pipeline or chasing buzz.
Yeah, I have a lot of thoughts about this. I feel like I can take another hour just to talk about this. But because what's interesting right now is in the market is being flooded by AI. And the typical reaction is like can be overwhelming. The typical reaction can be FOMO. Businesses feeling like they got to do something about it. And that's okay. I think personally, it's a little bit of playtime. It's like almost like if you give a kid like $5. It's not 50 cents. You give $5, go play. Maybe you lose money, sucks, but it's not 100. Go figure it out what you're gonna do. I think businesses are trying to get their feet wet to understand how do they add value. I think what we're gonna find is that the tech is moving way too fast. And what's gonna happen is the people that win are not gonna be the ones with the better AI. It's gonna go back to the basics. The people that are gonna win are the people that really have very thought out strategies. They think about their talent. They think about the org structure. They think about how do AI enables them to be
Yeah.
better at executing a strategy. But AI itself is an enhancer of a business. Doesn't mean that there's no value. There's a ton of value, but you have to know how does it fit as part of the puzzle. It is not the puzzle. It is a part of the puzzle, and that's why I think that there's been a lot of money, capital invested in AI. And what's really going to matter is who are the ones that are going to execute to see the output that the investors are expecting. So that's why I have a lot of thoughts behind like how intentional are organizations defining, for example, execution. You have to be very intentional to say, what do I want my organization to be like, be good at? What skill sets and people do I need to make decisions faster, to execute faster? I don't think businesses think that way, but it's going to come in very handy for those that are able to crack that and understand when you have a well-run engine like that, then you add AI and you see a 10x multiplier on value. But if you add AI on top of like a half running oil machine, you're gonna get an okay result, but not the best you could do because you're still gonna be slow in execution, or you're gonna have agents, for example, that don't talk to each other at some point. So you have siloed sort of buckets of improvements where you get 10% value, for example, where you could get 50. But so there's a lot of thought behind this strategy of how do you organize the team, how do you draw the architecture in a way that makes sense? How do you optimize your technology cost? Because AI is expensive. It can be. People talk about SaaS businesses being like 80 plus percent margins. With AI, now it's more like 50, 40. So there's a lot of optimization to be had there. And the only way you can justify those is if you reap the benefits of the investment. So my whole thought behind it, without getting too much into the weeds, is that don't just look at the shiny object and say, "I'm just going to add AI." Done. It's what do I want what's my strategy behind AI as a business? Do I want to be a leader, a follower, in the middle, and what do I need AI for? So if you work on those things, I think many businesses are going to be able to compete at a different level. But that's going to be the biggest filter, in my opinion, of all these startups, of all these companies. The ones that execute and have a strong strategy will come on top.
Interesting. In mortgage industries or companies, or specifically document handling, conditions, stare and compare, customer interactions. So where do you see AI making the biggest impact for the next few years?
In
And
mortgage,
yeah,
yeah. So mortgage is interesting because it's older, um, I would say, generation of employees that are less tech adept, and the adoption of technology is just behind compared to other industries on the tail. Again, driven like in a sort of like a chicken and the egg, driven by just behavior, but also because it's highly regulated. Anything regulated tends to be on the tail. They want to see very, very well proven technology before they implement anything that could risk anything, right? Um, so the reason why I say this is I think there will be people talk about radical improvement. There's a lot of startups, and there's even like companies that are trying to design this very idealistic world of like automatic AI mortgage generating engines. But the reality, I think, the biggest opportunities in a mortgage are more about making it accessible across the board because you have 40,000 plus lenders across the US. And ultimately, there is, I would say, a really long tail of lenders right now, brokers, wholesalers that are still operating out of emails and spreadsheets or napkins. So I think that is less about, in my opinion, about the evolution of the tech itself, but how do I make it accessible to those that can plug and play with in a low tech environment with existing tools to incorporate others and make him able to compete. But the things that are hot for sure right now that are basic use cases in mortgage is you really follow investor requirements to underwrite a loan is deterministic in nature. So it's not like rocket science, like super complex LLMs that are trying to like create this super, intelligent rationale of what to do with a loan. So there's opportunity to that, and I'll talk about it in a minute. But the basic use cases of AI is that paperwork. A lot of the companies are getting rid of paperwork by integrating with the providers. That's fine, but you are going to use paper at some point. You're gonna always borrow money from people that sometimes the integrations don't always work. You're gonna have to be able to eliminate the need of chasing paperwork or understanding what the papers you're submitted are for. Take the data out and do something with it. So AI can that's the most basic use case. And the other one is I'll speak of three real quick. The other one is calls. This is super hot right now. Like tons of even Y Combinator companies. I don't know how all these companies are getting funded because they're all doing the same, but there's a market for it. That's probably why. Remember, mortgage is $3 trillion in origination in loans a year, so it's quite large. But a lot of companies right now, and there is demand, are basically saying, "Hey, I have all these leads. Either I'm buying them or I'm getting them organically through referrals, I can't call them fast enough." There is a rule of thumb that says if it takes you more than 24 hours to call your leads, the chances are super high you're going to lose them. They're going to go somewhere else or they may change their mind. So a lot of these AI right now are with the speech capabilities that exist are able to quickly understand what leads. So here's what's happening with this. Here's where this is going. This is huge. Not only now with AI, you're able to rank your leads. You're able to basically say which ones you should manually spend time on because they like human touch and you should spend your time there. Which ones AI should straight up auto call to talk to the customer. And the way in which voice technology is advancing is ridiculous. I heard at Gill a case in which someone held a 20-minute conversation without even knowing this lady was talking to AI. I mean, it's crazy. So you have a chunk that will talk to AI, and then there's a model that would say, human touch AI, and then don't call for another 48 hours. Like chances of funding that loan is just, you'll get to it when you get to it. Doing that would allow you to not only get more coverage in less than 24 hours, we're talking about hours, not even double digit hours. Like in a few hours, you tap into most of your pipeline so you can get to more customers more quickly. But now the quality is also going to get better because you're tapping into the ones that you should be tapping into, the ones that will are more likely to convert. So that whole use case that I just described is what tons of startups are now offering. And there is no, I don't believe there is a one company that can grab the market. It's too big. There could be 20 new companies and they're all going to feed themselves. I don't know if they're going to be multi-billion companies, but they could be 50, $100 million company. Yeah, sure. Like it's just too much of an opportunity. Plus, you can sell this to banks, insurance companies, et cetera, et cetera. Those two that I mentioned are critical in mortgage. And the last one I will mention, because we're in the compliance business, is using AI to assess the quality of a loan. Do I have all the documents before I send it to investors? Are the data, are the documents the right date? Are the right documents duplicates? Because the minute I send something with the wrong information, missing information, or the wrong credit decision to an investor, there's a buyback. There's a repurchase now where a bank is losing money on it, and it's not little money. I mean, it could be thousands of dollars on a loan. On a loan that you could make 5 to 7,000, you may lose 4,000, $3,000 on a loan just because you made a stupid mistake. So AI, like that's a huge, huge business use case. The last one that I will mention that is highly complex, and this one is not a matter of this is not a tech company that can solve this, but it's actually the mortgage business themselves. The true
Mhm.
AI unlock is going to be when the engine itself can figure it out how to prioritize and allocate work and give and take work from multiple parties that interact with your origination system. The minute you get to an AI that can grab multiple pieces of information and say, you, John, you're going to work on this loan, you're not going to work on this, go call this person, and this loan needs to go to this queue, this loan go to that queue, and automatically escalate things because it's looking at when the expiration of the loan, like the ability to now manage highly complex variables that all affect speed. That's nirvana right there when we get there. But that requires maturity in other levels before we get there. But now you're talking about a much more seamless way of originating a loan. But that's what I see about the future, short and long term in mortgage.
That's perfect. And what guardrails around data quality, customer experience, and governance are non-negotiable. When AI is actually into all of this, according to you, Benito.
Yeah, no, I mean, a lot of this is non-negotiable because it's again, I go back to the whole idea of like you're putting your company's reputation at stake. Like you don't. So the minute you have AI that is not proven, that's why AI they all hallucinate. There's no such thing as no hallucination. It's just by how much. So AI can today is confusing to some people that are not in the weeds. They say, "Oh, I can do so much with AI. I just created this tool." It's like, well, cool. You can prove a concept, you can test it, you can play with a few colleagues. At scale, just be careful because AI hallucinates. And if you don't know what you're doing, which is very dangerous, at scale, it can be massive, 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 create a massive problem for a company. So because today you have to check out a lot of the output, um, you have to be careful about what you're putting in your system that's interacting with customers, whether it is documents you required. You need to be very careful. You're not asking the wrong thing or you're not asking enough. And if you're talking, if you have voice, then you have to make sure that you have, that you're the right disclosures, the right compliance, that you let people know in advance if needed, follow state regulation, and make sure that you don't compromise your brand. That's where it becomes really delicate. So that's where I worry is the ability to really follow regulation and the ability to include the customer as part of the journey with honesty. Those are pieces that I think are critical to not overlook.
That helps, Benito. And again, are there any specific resources, books, or podcasts that you recommend for someone looking to scale their career in operations and market tools?
You know, my learnings, to be frank, were a lot of it driven by my McKinsey experience, which feels isolating because I was lucky enough to have a job there and I learned so much because of their own knowledge um, library. Like you just read playbooks and then you apply them and learn from people. However, there are two recommendations I always have. I personally, I stepped out of McKinsey, but I've been in strategy roles, and I always like to read from Bain, BCG, McKinsey, and then I tap into like Accenture, like when I have a topic, I type the topic and put the name of the consulting company. I like to read what knowledge they have. I always think it's good to pick on the research papers from those companies. The best that I've found are McKinsey and BCG out of all of them. Technology, I feel like Accenture readings are pretty easy to digest, more than McKinsey, in my opinion. So I always recommend it's not about selling or hire consultants. Just they do have good knowledge, so they report papers. They can be very insightful in learning like how to account for risk when you scale. Like be very specific when you're asking, and you can get very insightful reading. I've learned a ton in implementing customer experience strategies by reading like 6 different papers on McKinsey. Like it was like incredibly helpful to me. Now, if I take a step back and become less sort of maybe structure or academic, I like the podcast How I Built This. Now, it is slightly different when you apply scalability for large companies because the problem's a little bit different. But what I like about How I Built This is that not only obviously it talked about, for those that may or may not know, it's a podcast that talk about how business were created and how do they grew. So that's the whole thing. How do they grew? And I always find it refreshing because the more you're in a company and the bigger they are, you have a lot of prejudice about what works and doesn't. And you forget that a lot of companies really were really good at scaling because they didn't have anything on their mind about what worked and what doesn't. They were just trying new tactics. So I always like to learn about how startup companies were nimble, what tools they had, what mindset they had, and how do they broke silos to get things done so quickly. And I've always thought it was interesting and it was a good refresher. And I always feel like the good answer on scalability comes from the new companies that are growing and like sort of the legacy ways of thinking. And you combine both and you put it under your company's sort of ceiling and understanding how does it work in your company. I think you can come up with a good framework. But how to build this is always fun because learning about how businesses grow, you really understand the thought process behind everything. Nothing is left by chance, and I like that. I like that very much because they tell a lot of good stories. So yeah, that's those are my cents on
And if
recommendations.
you were to combine all and then, have three pieces of advice for our listeners who aspire to excel in building scalable tech-enabled operations, what would that be, Benito?
Yeah, so I mean, to me, the biggest thing to me that I recommend people as they think about scalability, to be frank, is I say this and I sound like a broken record, is be intentional. Like write it on a piece of paper. Like really think about what are the things that can really mess up my strategy, my execution, and what are the things that I should prioritize because they can create a problem in my strategy. So I always think about be intentional. Don't like ask why. Like why is this team the way it is? Like, do we need this structure? Like, why is this tech not working? Why do we still paying for these vendors that are not doing anything for us? Why do we have this minimum contract? Like, ask questions and be intentional about how you want to drive the business. The second one I would say, and I'll give you three real quick, but the second one I would say is leverage AI. This is the time. Use it. Don't get behind. But don't use it to say I'm going to be the next Elon Musk. Like don't use it that way. Use it to say I just want to increase my output. And use it because you need to learn. All of us need to learn the basics of like how do I use AI to like spit things up on my execution of my day-to-day jobs, on my research, understanding markets, like numbers. So use AI to speed up execution is my second sort of advice. And the third one, don't lose sight of being data driven. None of this matters if you don't have good hygiene and habits around knowing what you're measuring, what they mean, what are your SLAs, at what point do you pull the core and ask for help, like when is it a red flag, like and you don't need 20 metrics. Metrics are a pyramid. At the very top, there's only one or two that matter, and then they trickle down. And as an organization, you go down in the organization, you're gonna find more metrics that matter to different people at different frequencies. But be intentional about data and metrics, then you're going to win. You're going to have an edge on competition.
Well, that brings us to the insightful episode of Go to Master's closure. Big thanks to Benito for sharing his experience and valuable insights. Remember, you can tune in every week to learn more about game changers driving hypergrowth companies across the globe. Go to Masters is brought to you by Everstage, your trusted partner for transforming the way businesses handle sales commissions. I'm your host, signing off.